Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Asian stocks tracking gains from Wall Street, while Bitcoin edges closer to $100,000. The ICC issues an arrest warrant for Israeli Prime Minister Benjamin Netanyahu for alleged war crimes in the Gaza Strip. Plus, Russia confirms it launched a new kind of ballistic missile to attack Ukraine, ramping up hostilities. It has just gone 8 a.m. across the Emirates, everybody. I'm Jumana Bersachi in Dubai, wrapping up what has been yet another eventful week for markets. I'm going to kick off the show today with a quick recap of what happened regionally with some of these central bank decisions that we previewed yesterday. Just to run through them very quickly, Turkey didn't end up cutting interest rates, but indicated that a cut could be coming soon. So something to bear in mind as you think of the trajectory for Turkish assets. Egypt kept rates on hold as well, buying a bit of time ahead of the IMF review. And then later on in the show, we will be talking about the South African Reserve Bank decision. Bit of a hawkish cut, I would say, the interpretation from the market. They did cut 25 basis points, but the reaction was quite hawkish. Now, moving on to global markets, you can see the futures behind me not doing a lot. S&P and Nasdaq leaning towards the red, though we did get a better session yesterday. Both of these indices closed up in the green. Financials saw a lot of love yesterday in trading. That sector leading some of the gains in the S&P, again, as the banking sector benefits from the expectation that a Trump administration could lead to further deal-making in that space. And then the tech space, all eyes were on Nvidia yesterday. And despite the initial negative reaction in after hours, the stock did end up in the green, about half a percentage point or so. So again, some green on the board coming through. Today, we're also tracking euro very closely. Look at where we're trading. The handle is below 105. This is somewhat of a psychological level. But just to point out that back in September, we were trading 8 full figures higher, 112. We have dropped a very long way over the course of the last few weeks. And again, euro has fallen for 3 straight days. We are approaching a 2023 low. Brent also in focus. It's actually seeing its best week in the last 7 weeks, so up 5% over the course of this week. Switching over, just want to flag as well, as we talk about Nvidia and the importance of Magnificent 7, it's not just the Magnificent 7 that have been rallying as of late. Look at the last couple of weeks. That little pop up tells you that the love in the sector is actually broadening, and broadening so much that stocks that are actually profitless, not reporting a positive profit, are participating in the rally. A broadening tech rally is what we're seeing. All right, let's also check in on how markets in Asia are faring. Avril is in our Singapore studio. Avril, just give us a sense of the mood overnight.
Well, the mood is quite upbeat, tracking Wall Street's performance after investors kind of shrugged off those initial concerns about Nvidia's revenue outlook. Infotech has gone from one of the worst performing sectors a day ago to one of the top performing today. The outlier is what we're seeing in China after tech giant Baidu's revenue disappointed. We're also continuing to track the fallout from US charges on Adani executives, and it looks like it's pretty contained to the Adani companies, because even though the flagship is extending the declines of about 22% from a day ago, and that's Adani Enterprises, we're actually seeing the Nifty managing to claw back almost all of the declines from yesterday. Keeping an eye on the yen as well as we do. Dollar yen is nudging closer to the 154 handle. We did hear from Ueda a day ago, and he seemed to suggest that the December meeting would be a live one. Japan inflation numbers also out today. While price gains moderated, they're still above the BOJ's 2% target. So, it keeps that December rate hike on the table. Jumana.
And perhaps may provide a little bit of support to the yen, Avril, as we've been talking about. Avril Hong in Singapore with an overview of Asian markets. Now, over to the region. Israel has rejected what it describes as absurd and false charges against Benjamin Netanyahu by the International Criminal Court. The ICC has issued an arrest warrant for the Israeli Prime Minister for alleged war crimes in the Gaza Strip, adding to pressure on the country's leadership over the conduct of its military campaign against Hamas. Paul Wallace, who leads our MENA economy and government coverage, joins me now. First of all, just give us a context as to why these arrest warrants were issued, Paul.
Hi, Jumana. Well, I think first and foremost, it's very unlikely that Benjamin Netanyahu will stand trial. He can't be tried in absentia, and obviously Israel isn't a signatory to the ICC. But it is hugely symbolic, and this is a big, big blow to Israel's standing in the rest of the world. And in practical terms, it does have an impact because most of Israel's major allies are ICC signatories. That includes the likes of the UK, France, Germany, Canada, Japan, and that effectively means Netanyahu can't go to those places anymore because if he does, he faces arrest if those countries decide to respect the warrants and carry out those arrests. So it is a big blow for sure.
Yeah, so there are about 120 signatories. Obviously, U.S. and Israel are not part of the signatories of ICC. You mentioned that they're very binding. But does Israel have any ability to overturn the decision at this point?
It's a bit of a tricky one, that. In theory, it should be very difficult. However, there is a sense, there is a feeling that Israel will try to do something, most likely through the U.S. Now, the U.S. has very much come out and said this is the wrong decision by the ICC. That's both Joe Biden and so far some of Trump's team have said the same thing. So there's likely to be, continuity between Biden and Trump on that point. It is possible that the U.S. decides to sanction the ICC again. It has done that in the past to try and put pressure on the entity. But even if it does that, it's very unclear as to whether it would, back down and cancel these warrants.
And Paul, while you're with us, I do want to ask you about the ongoing ceasefire discussions that are taking place. We know that Amos Hochstein traveled to Israel yesterday. Did anything come out of that meeting?
It seems very little. I think in some ways this ICC news overtook those Lebanon discussions because the ICC's announcement broke at about the same time that Netanyahu was meant to be meeting Amos Hochstein, Joe Biden, one of Joe Biden's senior Middle East envoys. So we haven't heard much from Hochstein's trip to Israel. There certainly has been progress this week, and it looks as if both the Lebanese government and Hezbollah are more inclined to accept the proposal that's on the table from the Americans. So it seems as if the ball is now in Israel's court. The U.S. was hoping for some kind of decision between the warring sides, this week, imminently. We'll still have to see if that does happen.
Paul, as ever, thank you so much. Paul Wallace, leading our MENA economy and government coverage. Thank you. Well, Russia has confirmed it launched a new kind of ballistic missile to attack Ukraine, the latest escalation of hostilities, sending an alarming signal to Kyiv's Western backers. For more, Bloomberg's John Herskovitz joins us now. John, there seems to be a lot of confusion exactly around the nature of what was fired. Can you just run us through exactly what Russia fired into Ukraine? Ukraine are saying that it was actually an ICBM. Tell us more about what exactly happened yesterday.
Sure. Russia and the U.S. said that this was an experimental intermediate range ballistic missile. Intermediate range is up to 5,000 kilometers. But this missile was based on an intercontinental ballistic missile design. This is the type missile that Russia can fire to the U.S. and around the world. So that's why there's a little bit of confusion. But the ICBM is for the strikes on the U.S. The intermediate range is for these 3,000 to 5,000 kilometer ranges.
Yeah, and it also would be, I believe, the first time that such a missile would be used since Cold War, so significant in that regard. But it comes alongside multiple points of escalation that have occurred the last couple of weeks, including Ukraine firing those long-range U.S. missiles into Russia, but then Putin responding and saying that the threshold for their nuclear doctrine is a lot lower. Why did Putin make that announcement?
Sure. I mean, we're seeing a lot of back and forth going on right now. At first, with the missile that Russia launched, this was it was meant to send a signal. The intermediate range ballistic missile is designed to carry a nuclear warhead. The one that Russia fired was conventional. by firing this type of missile, it was an escalation, but not one which would cross any significant red lines. But it also sent a signal that Russia can fire nuclear missiles. The range of up to 5,000 kilometers means that if the missile was launched from someplace like Moscow, it would have a range that could hit all parts of Europe. This comes as Putin has lowered his thresholds, his guardrails, for the use of nuclear weapons, saying that if Western military is used to attack his country, this could be met with a retaliatory strike. So it's trying to show that if the U.S. and its allies step up their participation with weapons that strike Russia, Russia can consider the nuclear option, and it has this missile that it fired off. Ukraine has started to fire into Russia missiles known as ATACMS, which have a 300-kilometer range. Not nearly as far, but it's a change, and these are U.S.-made missiles that are being used to hit within Russia.
Yeah. So deterrence, perhaps, maybe, is what Russia is looking for here. Bloomberg's John Herskovitz, thank you very much. Now, still ahead, hear why Shuaa Capital says the Fed is likely to pause in December as markets rally ahead of Trump's second term. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Asian equities are making gains today following Wall Street higher as investors shake off initial concerns over Nvidia's revenue outlook. Let's bring in Aarthi Chandrasekaran, the head of asset management at Shuaa Capital. Maybe let's just bring it back to Nvidia yesterday and the hype around the stock and all of the various interpretations. It did actually end the day up in the green. To what extent do you think Nvidia is going to continue to drive sentiment in these markets?
I think it's been a good story so far. I mean, I'm not sure why everyone was disappointed about the earnings because it just didn't meet the top of the estimate, but it still met the overall estimate. So I'm not sure what the disappointment was all about. But I guess this is what happens when it's rallied to 100% on a year-to-date basis. We like the stock. We are neutral on overall tech in the U.S. We like the software names, which is the second-in-line tech. We're moving more into the software names, defensives, industrials, and things like that. But we love tech. I think that's a place you want to position yourself, given the earnings growth is going to be better than the S&P 500.
So when you say you're neutral tech, but you still love it, what do you mean by that?
So you don't take overweight on it, overweight the index, but you still like continue holding it because the earnings momentum is going to be decent and better than the index. When do I want to change my page or turn the page on tech is when I start seeing disappointment in numbers versus the management guidance, not really the street expectation. The street can expect whatever they want, right? As long as it comes in lines with the broader street expectation, as long as they're able to deliver the management guidance, I'm good, and I would be continue to.
Is there a Trump element to the tech trade as well, given, again, his very visual close proximity to the likes of Elon Musk and other tech names?
It's hard to say, Joanna, because, I mean, Trump initially, most of the policies are pro-growth, pro-inflationary. You start coming closer, you know, some of them are not really so. Like, for example, tariff is more negative growth. You have tax, which is pro-growth. And then you have deregulation, which is some sectors could benefit and not really. And what matters to me on the Trump trade is what would be his active policy mix would look like, and when will he start attacking those policies? Would it be the first year, second year? Because in his first term, he didn't talk about trade wars until the end of the second year of his first term. So you don't know when these policies will get implemented. How big would it be? What kind of impact could it be? Imagine we all talk about pro-inflationary policy. Imagine he comes and does an energy policy wherein the oil starts going down. It could actually diffuse a disinflationary stimulus into the U.S. economy. So you don't know what he's going to attack.
A lot of questions. We don't know at this point. Well, there's still a couple of months, well, 1 month or so, one and a bit, before he actually takes office. Let's talk about the data now that's coming out of the U.S. jobless claims next week, non-farm payrolls. And I just wonder if you piece all of the data that's coming through together, whether you actually think the Fed will cut interest rates in December again.
I think they would pause. I mean, I think inflation is above the target. 0.3% uptick in the last PCI will not sit well with the Fed, right? And what I've seen is the progress on inflation has stalled, closer to stall. The last 3 months, we have seen the progress actually being decelerating. And if it stalls, the break-even inflation starts inching up, and that becomes very tricky for the Fed. And then you have an inflationary policy as well on top of it, which makes it another price shock for the economy.
Yeah.
So, and Fed has done an insurance cut to start the rate cycle. So I don't see a reason why they wouldn't be comfortable to pause.
So 10-year yields are also interesting as well. There's the front end of the curve, but then also 10-year yields. Initially, we saw a massive upward move, but now we seem to be stalling around 4.4%. What do you think is going on there?
I think the 2 years would be more volatile going forward, but the 10 years would more revolve around the policies of Trump. Would be more, it depends on what he's going to attack, what he's going to come out with, what kind of inflationary policies would he be. But I think there is the 10 years can actually keep knocking the door of 4.5. It's doable. Can it go to 5? A knee-jerk reaction? Anything is possible. But can it sustain at 5? No. Overall, I think what, as a long equity, long credit person myself, what I would expect to see is where the neutral rates are. What would be the neutral rates? And I think that would be around 3.5 is what I'm expecting. Higher than pre-pandemic levels, because you have a very higher inflationary policy. You have a high fiscal deficit coming into the system. So neutral rates will be higher and might be, you will achieve it in 2026 instead of 2025.
I'm surprised that you have visibility or confidence on where the neutral rates will end up, given
difficult.
we don't have a lot of confidence on what Trump's policies are going to bring. I mean, as you say, they could be deflationary, they could be growth negative, in which case the Fed may have to go back into accommodative territory again.
True. My neutral rates always is a moving target.
Yeah, fair enough. How much do you think the 10-year yield is going to also influence the trajectory, I should say, for U.S. stock markets as a whole? We spoke about some of the micro stories there, but do you think that the direction of travel is going to be influenced by where U.S. yields end up?
Yeah, I think so. Bond yields are kind of constraining the equity market valuation. I think that is going to hold good for some time, because why are the bond yields going up? Not because of a strong economy, not because of a great job market. It's going up because of inflationary policy and a high fiscal deficit. You might see other central banks not buying treasuries, but they might end up buying gold. You'll have tons of treasury supplies in the market. These are the combinations why yields are going up. And if this happens, then until the time you see pullback in yields, it's hard for the equity markets to struggle, and it will struggle a lot and hard for them to rally.
To keep going. Well, we're up 24% this year, so it's been a good year for stock market investors.
For the last 2 years, it's been a great year.
It's been a great couple of years. Aarthi, a pleasure to chat to you. Thank you so much for coming on. Aarthi Chandrasekaran, the head of asset management at Shuaa Capital. Now, coming up, President-elect Donald Trump says he's nominating former Florida Attorney General Pam Bondi to run the Justice Department. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. President-elect Donald Trump is nominating former Florida Attorney General Pam Bondi to run the U.S. Justice Department. This is after his first pick, Matt Gaetz, withdrew from consideration. So for more, let's bring in our news desk editor, Jill Desis. Jill, good to have you with us. It feels like every day is a who's who of all of these names that are being put forward. What do we know about Pam Bondi?
Hey, Jumana. Yeah, so Pam Bondi, I think, unlike Matt Gaetz, actually has quite a bit more experience, more directly related to this idea of being an attorney general. She was obviously attorney general of Florida for several years in the past decade, and then since then has really kind of characterized herself, established herself as a real Trump loyalist. During the first Trump administration, she actually worked out of the White House doing some communications work during his first impeachment trial. That situation, she also worked on a commission involving investigating opioid use. So that was one thing that Trump actually floated as something that he really valued in her position there. So you do have somebody here that does have extensive experience in an AG type role, certainly on the state level there, and then somebody who, yes, has also sort of proved her bona fides as somebody that seems like she would be very loyal to Trump were she to be confirmed for this position.
Yeah, one of the criterion seems to be loyalty to Trump. But she doesn't seem to come with some of the baggage that derailed the chances of his first pick, Matt Gaetz, who obviously was under investigation for allegations of sexual misconduct, drug use. Does that actually increase her chances of getting the position?
Yeah, Jumana, I think that, from the jump there with Matt Gaetz, those sexual misconduct allegations that really have sort of swirled around him for years at this point, he, of course, denies any wrongdoing. That did seem like it was going to be a pretty significant mountain for him to climb to ultimately be confirmed to this position. Pam Bondi doesn't really have a lot of those concerns, as you mentioned. So that is one thing that does seem like it works in her favor. I mean, this is, of course, a very interesting looking administration that Trump is putting together here, but it does seem like there hasn't been anything that's really emerged as of yet involving Pam Bondi that would create significant hurdles akin to what the previous pick really faced here.
Yeah, and it also just makes you wonder whether some of the other contentious picks that have been put forward will also come under similar pressure, similar to Gaetz, even from Senate Republicans. At this point, all of these are nominations, then none of the names that have been put forward have been confirmed. But what do these selections tell us about the kind of administration that Trump is creating?
Well, Jumana, I mean, we really have a pretty, again, yes, I mean, a very interesting administration that's coming together here. You do have some picks like Pam Bondi who do have experience working within these fields, but then there's others like the Defense Secretary Pete Hegseth, former Fox News television host, that really kind of show that the ultimate unifying factor for a lot of these picks is really just that they're very, very loyal to Trump. I mean, this isn't really a scenario like we saw with the first Trump administration where you did have what it seemed to be a balancing out of some picks that were certainly very pro-Trump, but then others that were more establishment Republicans at the time that did seem to be more of a moderating force or attempted to be more of a moderating force on Trump. Obviously, several of those picks ended up being ousted throughout the duration of Trump's first term in office. This time around, though, it doesn't really seem like Trump has, or it feels like he has a lot of those guardrails to necessarily play by. All of these picks have, to some extent or another, really embraced what Trump brings to politics and do seem like they would, want to carry out a lot of the policies that he really endorses on immigration and other matters that have really kind of characterized his campaign this year.
Jill, thank you so much for the overview. News Desk Editor Jill Desis. A look at equity futures before we head to the break. And not doing a lot this morning, but building up from some positive momentum yesterday. S&P futures slightly below the flat line. Nasdaq 100 also down about 15 basis points. Euro Stoxx futures looking up, however, despite the developments in Ukraine and Russia. Well, coming up, one region that is looking forward to the return of Donald Trump is the Gulf. We'll tell you what the $4 trillion sovereign wealth funds are hoping to achieve next. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Asian stocks tracking gains from Wall Street while Bitcoin edges closer to $100,000. As U.S. President-elect Donald Trump continues to form his second-term administration, we look at what Elon Musk's presence could mean for Gulf sovereign wealth funds. Plus, Kenya scraps 2 deals with the Adani Group worth more than $2.5 billion in the wake of U.S. corruption charges against the company's founder. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Versace as ever in Dubai. Let's get you up to speed on these markets. Not doing a lot today. The futures are leaning towards the red. Slightly better close for Wall Street. Financials leading the charge for the S&P. Good day for some of those big banking names, the likes of JP Morgan, Goldman Sachs, continue to enjoy this Trump trade rally, so to speak. Also, Nvidia in focus yesterday. And despite an initial negative reaction from the market when the results first came out, it actually ended the day up in the green. So giving license reasons for the rest of the tech space to continue rallying. Today, however, there is red on the board. Euro in focus, and I wanted to talk about this, namely because we have moved so far in such a short amount of time. Back in September, we were trading up at 112, so we've moved down 8 full big figures over the course of the last 2 months, broken through 105. There are expectations that the return of Trump to the White House could also add even more negative impacts to the growth prospects for the European economy. Tariffs could harm the outlook, and therefore there is an expectation that there will be an increasing amount of pressure on the ECB to start cutting rates. So that's why the euro is underperforming. And then Brent, actually a good week this week. It's up about 5% throughout the course of the week, namely this time around on back of geopolitical concerns, not in this part of the world, but actually with Ukraine and Russia. So that's sort of been underpinning some of the move in energy this week. Switching over, and I was talking about tech stocks and the fact that Nvidia did end the day up in the green yesterday. But more broadly speaking, this chart is interesting because it's, for me, it's kind of reminiscent of some of the price action we had in the days of 2021, 2022, when we had crypto performing very well. And of course, as I say this, Bitcoin is getting very close to $100,000. Meme stocks are doing well again. And then look, profitless tech stocks. These are tech names, companies that don't actually record a positive profit, are enjoying and participating in the rally in the last couple of weeks. So it's a broadening out of some of the move in these tech names. All right, let's check in also on how markets in Asia are faring. Avril is in our Singapore studio. Avril, how has the handover been today?
Yeah, it's been a pretty positive handover in the Asian session, and you were talking about that tech theme. I thought I'd just continue because in the region, it's Infotech that's sort of turned around from yesterday's performance, and investors are now shrugging off a bit of those Nvidia revenue outlook concerns. Where the outlier is what we're seeing in Chinese tech names. And this chart, courtesy of MLive's Mark Cranfield, shows you the HS Tech performance in the past week and how Alibaba was the drag after its earnings last Friday. But now we have the likes of Baidu, another big Chinese tech name that's disappointed on revenue, and that seems to be removing that last kind of underlying support for the Chinese tech gauge. And the point he's making is that if the home team this afternoon doesn't kind of swoop in or provide some form of support, this could be the really sour mood that Chinese tech names are going into the weekend with. And as I say, this is coming, this underperformance on a day where most of Asia's tech is seeing gains, Jumana.
Avril, thank you. Avril Hong in Singapore. Gulf sovereign wealth funds are increasingly optimistic the presence of Elon Musk and President-elect Donald Trump's inner circle will help them win even more deals in the U.S. The $4 trillion wealth funds are looking to clinch deals, particularly in sensitive areas like technology and artificial intelligence, where the Biden administration placed heavy restrictions. Bloomberg's Middle East economics and government reporter Abir Abu Hamad joins us now. Abir, good to have you with us. Well, I think all of us remarked and noticed that the PIF governor Yasser Ramayan was sat right next to President Trump and Elon Musk at a sporting event just a couple of days ago, and just really is a visual representation of how close these personalities are. What does the return of President Trump and also his proximity to Elon Musk mean for some of the Gulf sovereign wealth funds here?
Good morning, Joanna. So, I mean, yes, that photo sort of started the story that we worked on yesterday, but we've been having those questions for quite a while, right? Even before President-elect Trump won the presidency a few weeks ago. So we know that, unofficially Gulf countries would prefer a Donald Trump win because they get the sense that it's easier to do business deals with him. Now, with the combo of Elon Musk into the mix, we've spoken to our sources, executives, government officials from around the region, and the overwhelming sense here is that the alliance between Musk and Trump is going to bring more deals to the region, especially in sensitive areas like technology and AI, something that Saudi Arabia and the UAE particularly have been quite focused on over the past 2 years and have seen some, concerns rise up under the Biden administration, as you just alluded to. So, and we also know that during Trump's first term in 2016, the region massively benefited from the 4 years he saw from 2016 to 2020. And so this is what we're hearing from our contacts in the region. And again, this is something that has had an impact even before Trump won House, because people were already pricing in the impact of a Trump win in the White House and its impact in the region. So we already see this optimism for business making in the region even before Trump won. It's continued after he took House on November 5th.
And also, how can we forget that his first foreign visit was to Saudi Arabia? As you were speaking, Abu, we were playing some footage of the sword dancing, the famous sword dancing that took place back then. And again, just underpins how much Trump and the Trump administration do see the importance of the relations with this part of the world. But there is one change, though, that has happened from the first administration to now, and that is that a lot of these sovereign wealth funds, particularly the PIF, we heard from them at FII, the governor speaking, they've turned their focus towards more domestic investments. And in the past, I guess there was a perception that international companies could come to the region and use it as a means of mobilizing capital to invest in their home countries. This time around, the focus is a little different. So how do we expect these Gulf nations to be able to secure deals that actually would bring in investment inwards as opposed to outwards?
So, I mean, you're right. Two of the main changes this time around is who Donald Trump puts next to him in the White House. And Jumana, you were talking to the UAE's AI minister a couple of days ago, and he told you on a panel that he thinks that Trump is surrounding himself and Elon Musk is surrounding himself with smart people. So we need to see who is in the White House, who they surround themselves with, to see the trajectory of policy making. But then the second challenge here is that Gulf countries, again, namely the UAE, namely Saudi Arabia, will need to make promises, will need to make adjustments to their investments, or make sure that they pile on the investments that they have in the U.S. And if you remember, Jumana, G42, which is the UAE's AI powerhouse, has paired its existence in China in order to appease the U.S. and in order to continue to get those investments when it comes to AI and tech from the U.S. So we expect this to continue under the Trump administration, where he expects the Gulf countries to continue their pledges into the U.S. and pair, other pledges elsewhere. So those are the two main challenges that we're yet to see, and that should start in January.
Yeah, well, a great story up on the terminal. I would highly recommend our viewers to take a look at it. Abid Abu Hamad, Bloomberg's Middle East economics and government reporter. Thank you. Now for a look at some of the other stories we're following today. Climate protesters disrupted an MIT event with Saudi Arabian Aramco's chief financial officer Ziad Al-Murshid in a Boston suburb on Thursday, causing the executive to leave. About 15 people rushed onto the stage while Al-Murshid was speaking, waving posters with, quote, murderer written on them and chanting phrases such as no more drilling rigs. Prior to the incident, Al-Murshid had talked about the oil major's investment plans, pointing to more than $50 billion in planned capital expenditures in 2024. He also emphasized the need for higher energy production. A landmark fund launched by the UAE a year ago has managed to spend just a small fraction of its cash as it tries to find deals suited to its mandate of investing in the energy transition. The UAE unveiled plans last December to put $30 billion into the new fund, with a goal of mobilizing $250 billion by the end of the decade. But so far, Altera has committed $6.5 billion to 7 strategies managed by BlackRock, Brookfield Asset Management, and TPG. Altera's CEO says the actual funds spent are significantly lower due to a lack of investable deals in the energy transition. And Turkey's central bank has left its benchmark interest rate unchanged for an 8th straight month, while implying a cut could be soon justified due to slowing inflation. The one-week repo rate stays at 50%, in line with forecasts. Turkish inflation in the year to October was 48.6%. And speaking of central banks, Egypt also held rates at a record high as it weighs the effects of a new round of cuts to fuel subsidies. The central bank maintained the deposit rate at 27.25%, following 2 hikes earlier this year, as the country awaits the completion of a key review from the IMF. And coming up, Kenya scraps 2 deals with Adani Group worth some $2.6 billion in the wake of corruption allegations. We'll bring you the story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Kenya has cancelled 2 deals with Adani Group worth some $2.6 billion over alleged corruption. The move comes just hours after the company's billionaire founder was charged by the U.S. in a separate bribery scheme. Bloomberg's Andir Oganga has more. So, Andir, we're continuing to track the fallout from these allegations that have been leveled against Adani. But within Kenya, these are really big deals. What does their cancellation mean for the country?
Absolutely, Jumana. They're big deals, and now the government has to find alternative ways to fund these projects. They could opt for competitive bidding, or they could find a way to finance these projects themselves. But earlier we had heard from the former Prime Cabinet Secretary, Musalia Mudavadi, saying the diaspora bond could also be a viable tool in funding key infrastructure projects. And this cancellation is a relief to many Kenyans who've expressed hesitation over these Adani deals. It was done through a privately initiated bid. It cleared very quickly, raising questions over due diligence. But in retrospect, what the government should have done is float these tenders, seek submission, and then settle for the best. But when you look at Adani, it was marred with opacity. Nobody knew the nature of the negotiations, and nobody also knew if it was offering the country value for money. And this cuts across the 2 deals. If you look at the airport, they were going to manage it for 30 years for an amount of $1.85 billion. They're going to build a second runway and also a new passenger terminal. But there was a petition filed in court saying this project was unaffordable, it was threatening jobs of locals and also exposing the country to great fiscal risk. We also saw the court suspend a deal in the energy sector where they were going to build power transmission lines for an amount of $736 million. So this is a huge blow to the government.
Yeah, so you've got to wonder whether it was actually a financial decision or a political decision. Is this going to score the president any political points with the electorate? Are they going to approve of the decision?
That is the big question, because, Jumana, earlier in the morning, we had the Minister of Energy saying that this is a good project. He was defending it. He was appearing before legislators, and he said there has been no corruption or bribery as far as the PIP with Adani is concerned. He went ahead to say that the indictment in the U.S. doesn't affect the deal in Kenya. A couple of hours later, his boss addresses the nation and says he's cancelling this project. And this is exactly what we've been seeing with this government. When there's a new policy that has been introduced and there's public pushback, they deny, they defend, and then they recede their ground. We saw President William Ruto earlier on defend this Adani deal, saying the country needs public-private partnership because they do not have any headroom to borrow. But then he went ahead and did that 180-degree turn. And analysts are saying that this just goes to show that the policies of this administration are struggling to gain widespread support. Other than that, the speech was a monologue of self-praise. He spoke about how inflation is low. He spoke about interest going low. And he also spoke about a strong shilling and strong reserves, but acknowledged that the people are yet to feel the impact of these new developments.
Yeah, really fascinating. I just find it fascinating that this Adani story is going to have global implications, especially in countries like Kenya as well, where financially it really does move the needle. Bloomberg's Andir Oganga in Kigali. Thank you so much. Well, speaking of Adani, let's just take a look at how some of the key companies within the portfolio are trading today. This is just today's price action, and there you can see it. We're down anything from 3% to 8% on some of the big names. Adani Energy down 8.4%, Adani Green down 6.4%. Yesterday, you remember that they pulled a bond issuance that they were planning on bringing to the market. So there have been a real substantial impact on where the portfolio and the stocks in the portfolio are trading. Now for a look at some of the other stories we're following as well. Mali's military leader has appointed Major General Abdoulaye Maïga as the country's new prime minister. Maïga's predecessor was fired earlier this week for criticizing the junta's failure to implement a transition to civilian rule. Mali's leaders missed a March deadline to hand over power, postponing elections indefinitely. And South Africa's central bank has lowered borrowing costs for a second successive meeting and said its modeling shows further cuts are in the offing, but the outlook remains highly uncertain. Policymakers cut the benchmark interest rate by 25 basis points to 7.75%. The data this week showed South Africa's annual inflation cooling more than expected. And coming up, international sailing competition, SailGP, kicks off in Dubai this weekend. We speak to the managing director about boosting its reach next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Let's turn to the world of sports. International sailing competition, SailGP, is kicking off its 5th season in Dubai this weekend and will end in Abu Dhabi in 2025. Now, ahead of this, SailGP has announced a slew of partnerships, including with Emirates, as it seeks to broaden its reach. SailGP Managing Director Andrew Thompson joins us now. Good to have you with us. Talk us through this event. What exactly is going to happen this weekend?
Yeah, well, SailGP is Grand Prix racing on water, so we've got 12 national teams competing in close-to-shore stadium racing in front of the grandstands here at Mina Rashid in Dubai. Yeah,
so spectators will just get a view of these essentially boats racing. Yeah, how long is the race?
Yeah, so it's 15 minutes each race.
Yeah.
We've got 6 races over the weekend. The hydrofoiling catamarans going 100 kilometres per hour in a very short course, a mile-long course. So if you're there on the shoreline, you can see the whole race evolving in front of you.
Yeah, so how are you looking to broaden the appeal of this race, this competition?
Yeah, look, I think it's that, first and foremost, this is a racing property. I think when people think sailing, they think, you know, white triangles and blue backgrounds out to the ocean. This is inshore racing, and you know, we know there's a huge market of racing fans who, you know, and this product is broadly appealing to them. And you know, our viewership is now 15 million live viewers per race around the world. And yeah, we've got now a slew of sponsors that are getting behind it.
Yeah, so I wanted to ask you about that. I saw that you also announced a long-term partnership with Rolex, and we were just talking about also a potential partnership with Emirates as well. What did these partnerships do to help expand the reach and raise the profile of the event?
I think, you know, we're privileged to be in long-term partnerships with such, you know, significant brands in the sports industry, you know, similar to, you know, likes of Wimbledon or you know, DP World Tour and so forth. Yeah, look, they give us a lot of gravitas, and look, they see us as the future of a sport. We're a growing sport, and there's a lot of upside for them as sponsors. So Rolex have actually just signed as a 10-year title partner, so it will now be called the Rolex SailGP Championship.
Yeah, when I hear Rolex, I think of luxury. So are you sort of positioning this as a luxury sailing competition as well?
Not necessarily. It's very much innovation, and it's, you know, the tech on these boats. These boats are extreme IoT devices on water. There's so many data points that come off the boats and onto the shore. So we're actually appealing to a younger demographic as well that you'd usually associate with sailing.
Yeah. So I've also noticed that it is a global event. You're taking the race to various countries around the world. I mean, these are really far countries. You've got New Zealand, Brazil, Spain. How operationally difficult is it to take all these boats to all these different locations?
Yeah, for sure it's a challenge. We've actually announced a partnership with DP World, who are going to manage our logistics around the world, which certainly helps. So we have 140-foot containers that take all our boats around the world with us. But look, it's, you know, part of our global reach. We're a global championship, and yeah, really bringing our racing to the fans that are asking for us to have those races in their markets.
Where geographically is your biggest fan base right now?
Well, I'd certainly say New Zealand is a hotbed of sailing.
Interesting. Yeah, of course.
It's a huge sport there. The US is growing. We actually, last year on CBS in the US, we had the highest rating for sailing in 30 years. And that was on CBS main network at 1.8 million people watching that live in the US. So Brazil is actually a huge market, as is the Middle East, by the way.
Yeah. So I want to round up with a question. I was actually at the COP climate talks last week in Baku, and they're continuing. I thought it was interesting to see that SailGP is the first climate-positive sports property. What do you mean by that?
Well, look, our boats are powered by the wind. So, you know, different to the racing properties, we don't actually need it. We use wind energy to power our boats. boats. And also, the ocean is our racetrack, so we certainly believe that we have a responsibility to the environment. And so, for example, this weekend here in Dubai, our event is 100% powered by clean energy. You know, we have a solar array up at our event. So, as I say, we just feel like we have a responsibility to do right as a business.
And what's your ultimate ambition for SailGP? Where do you see this going? What do you want to achieve once you get through the next year?
Yeah, look, I think we want to continue the cadence of events and growing our events. We're at 13 events this season. You know, I think we'll probably grow up to something like 18 to 20 events per season. Really, we're trying to establish you know, an elite platform for sailors and athletes that's never existed in the sport. You know, we have female athletes on our boats as well, competing alongside males, and really having gender equity in sport is something that we're really looking to achieve.
Fantastic. Well, I look forward to watching some of the footage. Andrew Thompson, SailGP Managing Director, speaking to us about the event in Dubai this weekend. Well, we're going to round up the first hour of Horizons by taking a look at some of the price action in these key markets. S&P futures not doing that much, though we are leaning slightly towards the red. Nasdaq 100 down about 9 basis points as well. This building up on a more positive session yesterday. Nvidia was in focus. The stock ended up in the green despite the initial downtick. So we ended up the day about 0.5% firmer. Euro Stoxx futures also leaning towards the green as well, up 0.3%, as we keep a close eye on some of the price action in the currency there. This is the picture for fixed income today. 2-year yields, you can see, are about not moving much, but about 1 basis point lower. 10-year yields still stuck in at around 4.4%. This has been a key support level over the past couple of days. And then oil as well in focus, not shown up here, but I do just want to point out that we are up 5% over the course of this week. This is where we are at right now. Brent just shy of $75. But that is it for the first hour of Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for the second hour as Jennifer Zabazaja joins me from Johannesburg. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Asian stocks tracking gains from Wall Street while Bitcoin edges closer to $100,000. The ICC issues an arrest warrant for Israeli Prime Minister Benjamin Netanyahu for alleged war crimes in the Gaza Strip. Plus, Russia confirms it launched a new kind of ballistic missile to attack Ukraine, ramping up hostilities. Well, good morning, everybody. It's just gone 9 a.m. across the Emirates. I'm Jumana Bersachi in Dubai.
And I'm Jennifer Zabazaja in Johannesburg, where it has just gone 7 a.m. Welcome to the second hour of Horizons Middle East and Africa. Nice to be here, Jumana.
Yeah, great to have you on the show again, Jen. Let us get straight to these markets and talk about some of the reaction that we had to Nvidia yesterday. That was the main focus of pretty much all of the shows into and out of the earnings. But what we did see is, despite the initial negative reaction in after hours, by the end of the day, Nvidia ended up in positive territory. So it sort of set the stage for broader stock markets. We ended up in the green for Wall Street. Today, futures not doing a whole lot, trading sideways slightly towards the red. This as we head into next week. And remember, non-farm payrolls is coming up. It keeps coming up very quickly, but again, a signal to watch out for in the coming weeks. But euro very much in focus here, namely because of how much strength we have seen in the USD, but also some of the European growth stories that have been surrounding the currency. We're down 8 big figures since September through a key level, 105. So pressure keeps being exerted on euro to the downside, is something that I thought was quite necessary to flag in the context of how much strength we're seeing in the greenback. And then Brent just shy of $75. The energy complex is actually up 5% over the course of this week. No real fundamental factors to draw on here, but a lot of that could be interpreted as further geopolitical premium being priced into the energy complex. And this time around, we're keeping a close eye on developments in Ukraine and Russia. Switching over our terminal chart today, I spoke about Nvidia, and for most of this year and last year, the theme was the outperformance of the Magnificent Seven stocks. But here, just a little uptick the last couple of weeks or so, you'll see that the rally has actually started to broaden out, and some of these profitless tech stocks, i.e. tech companies that aren't actually making a positive profit, has started rallying. So it tells you that investors want in on the tech story, and the rally is broadening out. So something to bear in mind. Okay, let's also check in how markets in Asia are faring. Avril is in our Singapore studio. Avril, give us a run through of how these markets are faring in Asia.
April in Asia, Jumana. We're seeing it pretty positive across the board, except in China stocks, right? So I thought I'd just highlight what we're seeing in the yuan as well, because it's interesting today. We're not seeing that bad declines on the onshore renminbi. Offshore actually sitting flat after a string of losses, and partly to do with the PBOC coming through with a stronger than estimated yuan fix today, but also some headlines coming up from state media and how authorities see limited upside for the US dollar, a stable Chinese currency. So they seem to be squashing any bearish yuan sentiment. So that's in focus today. But also what we're seeing on the Indian rupee. Remember, just a day ago, it closed at a record low amid stock market outflows. Of course, this is partly to do with the Adani fallout. It's sitting flat today. And then dollar yen continuing to nudge towards the 154.4 level. And this is after Japan CPI numbers today kind of back the case for another BOJ rate hike. Guys.
Avril Hong in Singapore for us. Avril, we'll check back in with you in just a bit. But for now, let's turn to what is happening in the Middle East. Israel has rejected what it describes as, quote, absurd and false charges against Benjamin Netanyahu by the International Criminal Court. The ICC has issued an arrest warrant for the Israeli prime minister for alleged war crimes in the Gaza Strip, adding to pressure on the country's leadership over the conduct of its military campaign against Hamas. For more on this, let's bring in Bloomberg's Dan Williams, who is joining us from Jerusalem. So, Dan, give us some insight into why exactly these warrants were issued and why now.
Well, this was in the works for several months. I don't think this would have been unanticipated in Israel, though it's certainly unwelcome. Netanyahu, the Israeli prime minister, and his former defense minister, Yoav Gallant, are both accused of crimes against humanity, of war crimes, including allegations of a deliberate starvation campaign against Palestinian civilians in the Gaza Strip. Israel, of course, rejects this out of hand, and the prime minister, in his initial reactions yesterday, was citing the number of food shipments brought into the Gaza Strip by Israel as it wages the war against the Hamas government, the Hamas military force there. He even mentioned polio vaccination campaigns that Israel has enabled as evidence, he says, that Israel is doing the exact opposite of conveying genocidal intent. But what we see now with these warrants is effectively a cresting of the lawfare that has accompanied almost 14 months of warfare in the region, a war that began in the Gaza Strip and has spread to a number of other fronts as Israel battles several Iranian proxy groups in what it calls a battle for its survival. So Israel says this really is a blow to its self-defense, its independence, its sovereignty, its bid to survive. But of course, those who support the arrest warrants say they're working in the interests of defenseless Palestinian civilians who also want to survive. So there's a lot of bad blood around this decision. And the next stage to see is how and if it's implemented and whether this affects Netanyahu's travels, because he'll effectively be rendered a pariah in potentially as many as 124 countries that are signatories to the treaty that underpins the International Criminal Court and would therefore be required to implement these arrest warrants should these two men come into their territory.
Right. And Dan, let's just stick on that because we saw something similar happen with Vladimir Putin last year by the ICC. I remember because BRICS was happening here in South Africa, and there was a lot of conflicting response as to whether or not countries should actually abide by these arrest warrants. When you talk about some of the countries that are signatories and those that aren't, I mean, what is the reaction that we are getting to this new ICC warrant?
Well, we've seen a number of countries in Western Europe, including obviously the Netherlands, which is the host to the ICC, located at The Hague, saying they would implement these arrest warrants as required. However, there have been misgivings voiced openly by a number of countries, including Argentina, including Czech Republic, including Austria. While not out flat refusing to implement them, I think there is an air of skepticism, an air of resentment around this specific decision to issue arrest warrants and what it might spell in the future. It's worth remembering that the ICC is essentially envisioned as a forum that's meant to bring justice to countries deemed lacking in internal justice systems. Israel insists that its justice system is perfectly fine, especially as it functions in a perpetual state of war. I think also many people will be looking to the United States and to the incoming Trump administration, where some are saying there's already two lawmakers who've indicated that they might pass legislation, specific U.S. legislation that would protect Israel and impose U.S. action against countries that seek to implement this.
Right.
So certainly the ICC's made a big decision, and there will be quite a bit of fallout in the coming days and weeks.
Right, of course, and we know you'll be following that. Bloomberg's Dan Williams in Jerusalem. Dan, thanks so much. Jumana?
Well, Ukraine says Russia has launched a new kind of ballistic missile in the latest escalation of hostilities and an alarming signal to Kyiv's Western backers. For more, Bloomberg's Greg Sullivan joins us now. So there was a bit of confusion as to what type of missile was launched towards Ukraine yesterday. Zelensky seems to think that it was actually an ICBM. What do we know about the missile that was fired, and how is it different from what was already being used in the war?
You're right, there was a bit of confusion yesterday. We first heard from Ukraine's Air Force that there was an intercontinental ballistic missile, but later we heard from Western officials, and Putin himself confirmed in an address to the nation, there was actually an intermediate-range ballistic missile. Still a very fast-traveling and potentially destructive missile, but not quite as long of a range. We do know that these type of weapons can carry nuclear payloads. Of course, this one did not. It had a conventional warhead on it. But it was a new type of weapon that has not yet been used on the battlefield.
Yeah, so again, I mean, yesterday we were here talking about the potential for further escalation. We've seen yet another escalation with a new type of missile being launched. Where do we go from here, and how likely is it that we are going to see not just Ukraine respond, but actually, again, more U.S. support come in to support Ukraine's efforts in this war?
Well, as you said, this was clearly an escalation, and Putin himself said that it came in response to the use of ATACMS and Storm Shadow missiles that were provided by the U.S. and the U.K. to Ukraine. So he is escalating here, and those missiles were provided because Moscow is using North Korean troops. So there's been escalations on both sides. What's interesting here is that this may have been a very calculated move to avoid further escalation, but regardless, this is a new weapon on the battlefield, and response steps could be taken. We do know that Ukraine is seeking new air defense systems that can handle this, so we'll have to wait and see what comes next.
Yeah, again, juxtaposed with the promise of Trump returning back to office and securing a peace deal in 24 hours. I think one day is what he said. How do we square up what is happening on the ground, the daily escalations, the daily exchange of crossfire and missiles, with the desire to get to some form of a peace agreement?
Well, clearly this was a response. This was targeted, a signal. Both sides are trying to strengthen their hands with the potential that Trump will try and force them to the negotiating table. And one way to read this escalatory step is that Moscow is trying to intimidate Kyiv and its European allies to make them want to come to the negotiating table and potentially end the war, potentially even on terms that are more favorable to Russia.
Right. So a ramp up to bring them to the negotiating table. Interesting. Okay, Bloomberg's Greg Sullivan with the latest out of Ukraine and Russia. Thank you. Well, still ahead, we're speaking with the CEO of Investec South Africa, Cumesh Moodliar, following the release of its latest earnings. But up next, we're talking markets and the policy outlook for central banks amid sticky inflation in Europe and the U.S. Analysis from Ascalon Capital coming up. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. So much going on with these markets. We've been talking about the Trump trade rally, some consolidation seen in the last couple of days. And in terms of data, we're watching out for PMI manufacturing numbers in the U.S. later this afternoon. To discuss this and more, let's get some market analysis from Ascalon Capital CIO Isaac Poole, who joins us from Tasmania. Great to have you with us, Isaac. I believe this is actually my first time speaking to a guest from Tasmania, so it's a first for me. Let's talk about the path forward for markets from here. Yesterday, there was a lot of focus on Nvidia earnings, rightly so, because it's accounted for something like 20% of the total returns of the S&P this year. How much emphasis do you personally place on Nvidia and the outlook from here?
I mean, it's such a big part of the market, so it's dominated the week in terms of market news, I think. The challenge is that it's built in into the broader market expectations for really solid earnings growth over the rest of, or over next year, over 2025. And it's going to be an increasingly challenging hurdle, I think, for not just Nvidia and the rest of the Magnificent Seven, but the broader market to leap over to justify what now looks like some fairly extended valuations across the US.
Do you think this market is looking a little bit tired? You mentioned the valuations, PE multiples obviously higher than where they were when Trump was last in office. Is this rally going to run out of steam?
I mean, high valuations don't of themselves become a catalyst for a re-rating lower, but I think where the challenge is that earnings expectations for next year have been ratcheted higher to solid double-digit, and then 2026 higher again to even higher double-digit growth rates. That looks challenging, I think, against a backdrop of a slowing US consumer and perhaps US growth that looks okay from a nominal perspective, but is trending lower. Inflation is moving lower and real growth is moving lower. So that's, I think, where the difficulty could lie for these valuations to be justified. We're going to not just need to see resilience in the US economy, we're going to have to see a re-acceleration. And that, I think, is going to be a little bit of a challenge given the current environment.
Where do you think the most stretched part of the market is right now? Where are we seeing a lot of over-exuberance?
I think you're seeing that in parts of the tech sector, the unprofitable tech stocks, and that that itself is a little bit of a concern. But stepping away from equities, where I think you see some real overvaluation perhaps is in the credit markets, and in particular high yield credit, sub-investment grade, where spreads have just tightened in so sharply. We're at multi-decade tights. That I think is an area where investors have been looking at the absolute level of the yield and not worrying about the fact that spreads are simply not compensating investors for the level of risk that they're taking on. And in a perfect world, given that the market now looks like it's priced to perfection, perhaps we can see those spreads stay narrow. But it means that the hurdle for a miss is quite low, and the potential for spreads to blow out quite significantly is quite high. So there, I think you need to be very judicious where you choose to take risk on in the credit markets.
Yeah, one of the other themes that has emerged is one of U.S. exceptionalism. You look at the performance of global stock markets, U.S. has massively outperformed other stock markets around the world, including China, Europe, of course, as well, being hit the most. And I just wonder, in line with your views of what you just articulated and U.S. stock markets looking slightly rich, where do you put your money right now?
It's difficult to find a place where you really want to take a lot of risk on, to be honest. I think you mentioned China, and China's relative valuation in the equity market looks okay. But of course, they've had this drip feeding of policy support, which just isn't going to be enough to drive a re-acceleration of growth. And so you could perhaps take a relative position there, but only if you've got significant risk appetite. I really think the place to be considering now is building some resilience and perhaps winding back some exposure to broadly overvalued equities globally, and maybe taking advantage of the fact that Treasury yields have backed up over the last month and a half or so, and now offer pretty good income, pretty good yields, but also genuine downside protection once again. So for anyone who missed out on locking in US Treasury yields up above 5%, we're now perhaps at levels that look attractive again.
Yeah, I mean, it makes sense given that 10-year yields are trading at 4.4% and have been so for the last couple of weeks. Tells you that there is good interest to buy there. What do you think the biggest risk is to a long duration call at this point?
It's inflation, sticky inflation. We've seen that across the globe, but especially so in the US, where inflation is trending lower. I think it's still safe to say that. But it's been sticky above the level where the Fed would feel really, really comfortable with moving rates back towards a neutral position. And you throw into the mix the prospect for tariffs, which I think will be introduced. the prospect for a reduced labor force through immigration policies in the US, all of that could prove inflationary. And so, that's a risk to a yield call. But, I mean, it's also a risk to equities, where if we have an inflationary economy with growth slowing, we've seen that playbook before in the last few years, and that's a difficult place to allocate money into.
Yeah. Well, great to have you with us. A pleasure to speak to you this morning. Ascalon Capital CIO Isaac Poole joining us from Tasmania. Thank you. Well, coming up, Donald Trump says he's nominating former Florida Attorney General Pam Bondi to run the Justice Department. Now, more on the president-elect's cabinet picks next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasajja in Johannesburg. To the U.S. now, where President-elect Donald Trump is nominating former Florida Attorney General Pam Bondi to run the U.S. Justice Department. This after his first pick, Matt Gaetz, withdrew from consideration. For more, let's bring in our news desk editor, Jill Desis, who is joining us now. So, Jill, tell us a bit about Pam Bondi and what she's likely to bring to this AG position.
Well, Jen, what you get out of Pam Bondi that you didn't get out of Matt Gaetz is somebody that actually does have quite a bit more extensive experience working as an attorney general. So she was the AG of Florida for quite a few years there, actually, tried to challenge the Affordable Care Act, Obama's signature Medicare health legislation while she was in office there. She also, though, like any of the other picks that Trump has really brought into the administration, or at least nominated to join his administration, she still is a pretty fierce loyalist of the incoming president. During his first term in office, she actually worked with the White House, worked across communications in defending him during his first indictment case. She also was part of an opioid commission. That's something that Trump actually cited when he was talking a bit about why he had picked her to replace Gaetz here. So, yeah, I mean, you're looking at somebody that likely would, if she is confirmed in this nomination, continue to try to enforce a lot of Trump's policies, as she does really pretty strongly back the president here.
And you were bringing up Matt Gaetz, Jill. Matt Gaetz withdrawing from that nomination consideration on Thursday. And you said there's some of the baggage, or she doesn't come with as much baggage as Matt Gaetz did. I mean, what if anything, do we know about that?
I mean, really here with Matt Gaetz, you're looking at somebody that for quite a while has had the shadow cast over him with regard to a lot of sexual misconduct allegations, including some involving minors. He has, of course, vehemently denied a lot of the allegations facing him, but that did really seem to be one of the chief concerns that would have created a big hurdle for Matt Gaetz to ultimately get confirmed by the Senate. That's something that created this big cloud over the course of this very short period of time under which he obviously was, the nominee for this type of position. And it seems like that's just something that he wasn't able, or likely wouldn't have been able to overcome in this position. So what you get out of a candidate like Pam Bondi, who doesn't really have a lot of, these same, to the extent that you're seeing these types of controversies facing her, it does seem like maybe she might be poised for a smoother confirmation process here.
And Jill, finally, I mean, what does all of this say about the administration Trump is trying to create?
Well, ultimately, Jen, you're still seeing an administration that Trump is building out of a lot of loyalists. I mean, this is very different from his first term in office, where you saw a bit of a balance between people who were definitely very much in the pro-Trump camp, but you also saw a lot of, more establishment Republicans who were seen at that time during his first administration as maybe providing some kind of a check on the president. Obviously, several of those picks turned out to be fairly disastrous, and, resigned or were pushed out while in office. This time around, it does seem like Trump is much more keen to staff his cabinet, staff his administration with people that are going to want to implement a lot of his policies. He's got what looks like a very, friendlier administration coming in if all of these picks are ultimately to be confirmed in the Senate.
Thanks so much, Jill Desis, our news desk editor there in Hong Kong, for us with the latest. Jumana?
All right, we're going to head to a quick break, but this is how equity futures are shaping up as we head into the European Open. Euro stocks futures, the only little bit of green on the board, up 0.2%. The rest of the market leaning towards the red, down about 0.1 and 0.2%. Later on today, we get those U.S. PMI numbers to watch out for, so keep an eye on that. Now, coming up, Investec will pay its highest interim dividend on record after profit advanced during the 6 months to September. We'll be speaking to the group's South Africa CEO, Cumesh Moodliar, next. This is Bloomberg.
This is Horizons Middle East and Africa, our top stories this morning. Asian stocks tracking gains from Wall Street while Bitcoin is within touching distance of $100,000. Investec boosts its interim dividend to its highest ever level after profits rose in the first half. We'll speak with the bank's South Africa CEO in just a few minutes. Plus, Kenya scraps 2 deals with the Adani Group worth more than $2.5 billion in the wake of those U.S. corruption charges against the company's founder. It has just gone 7:30 a.m. in South Africa. I'm Jennifer Zapasaja in Johannesburg.
Hey, Jen, and Jumana Versace in Dubai, where it's just gone 9:30 a.m. Welcome to the second hour of Horizons Middle East and Africa.
Yeah, great to be here. Great to get to Friday, Jumana. Let's take a look at where markets, though, are positioned ahead of the trading day. If we take a look first at U.S. equities, little change right now, as you can see, but notable because over the past few days, we have been paying close attention to what Nvidia was doing and how that affected markets. We're seeing the major indices ending up closing the week in the green. I have the Russell 2000 up here, too, because we're seeing them trading sideways, but that's coming after posting 4 straight days of gains, leading U.S. markets higher on the week. We have the 10-year yield still, for the most part, down, easing less than 1 basis point, but still around that 4.40%. We are hearing some reports from the Wall Street Journal that Kevin Warsh is a front runner for the role of Treasury Secretary, with the possibility of him leading the Fed when Powell's term ends in 2026. Still paying close attention to what the 10-year is doing. Also have Brent crude up here in focus as tensions between Ukraine and Russia ratchet up. We're still seeing Brent crude trading a bit range bound, but it's climbing above $74 a barrel right now. I also want to zero in on what we're seeing with South African assets. We mentioned that we got that Reserve Bank decision on Thursday, cutting its rate by 25 basis points. That was largely expected. But if you take a look at assets, we're seeing them largely pouring water over the idea of a deep rate cutting cycle. If we take a look first at the Rand, we've seen the Rand whipsaw a bit over the past few hours since that decision was made, but it's back around the same level it was 24 hours ago before the decision. We also have the FTSE JSE index up here. We've seen South African stocks ending yesterday just slightly higher, and we have retailers, stores, and banks leading the rally amid the central bank easing. But we did get a message, of caution from Central Bank Governor Lesetja Netanyahu. Meanwhile, let's check in on how markets in Asia are faring. Avril Hong is standing by in our Singapore studio. Hey, Avril.
Yeah, Jen, you've been looking at some of these EM currencies. I thought I'd add a few more into the mix. Take a look at what's happening in the Chinese yuan. Today, it looks like the offshore renminbi is managing to snap a losing streak. And this is partially to do with the PBOC's yuan fix today that came in stronger than estimates, but also some of these headlines from state media that suggest that authorities think they'll see stability in the Chinese currency and limited upside on the greenback. So that's kind of quashing expectations on bearishness towards the Chinese currency. Also interesting how dollar yen is moving higher despite nudging closer towards 154 earlier today following Japanese inflation data that makes the case for another BOJ rate hike in the next couple of months. And of course, yesterday comments from Ueda seemed to put that December rate hike on the table, suggesting that it was going to be a live meeting. Keeping an eye on the rupee as well, that's holding flat after stock sell-off yesterday left the currency at the weakest level against the greenback on record. Guys?
Thanks so much, Ava Hong in Singapore for us. Let's bring it back, though, over here. Investec will pay its highest interim dividend on record after the bank's profit advanced during the latest 6-month period. The specialist lender with operations in the UK and South Africa posted a 7.6% jump in adjusted operating profit, which came in at $600 million. Cumesh Moodliar is the Investec South Africa CEO, and he's joining us now from Cape Town. Cumesh, great to talk to you again. I know we spoke not too long ago. 7.6%, that is significant for you guys. I mean, did you expect this? What's your reaction to these results?
Thanks very much, Jennifer, and thanks for having me on the show this morning. I think coming out of what's really been a difficult trading period in both of our anchor geographies, I think we're very proud of the results achieved. I think in context, having regards for the levels of uncertainty just both in South Africa and in the UK as we entered these elections, I think those results are reflective of solid performance from our underlying franchises. Similarly, I think just taking into account the high interest rate environment that we're starting to come out of, you've seen some of that reflected across the industry as a whole. There've been elevated levels of credit loss ratios as well. So I think, notwithstanding all of that, I think we feel that these are a solid set of results for the first 6 months.
Cumesh, you talked about how we are potentially getting into the rate-cutting cycle, but we did get a cautious message from Netanyahu on Thursday. Did you agree with his tone and really about the uncertainty that we're getting into in 2025?
Absolutely, Jennifer. I think there's a level of caution in the air. I think, as you have a new incoming Trump administration in the US, the risk of what trade policies may look like, trade tariffs that may be introduced, and as a result of some of that, inflationary pressure. Also, you're looking at a stronger dollar and potentially volatility in the rand, which I know you've also mentioned earlier this morning. So I think all of those potentially lead to inflationary pressure. And if one casts one's mind to current geopolitical tensions, the risk of a higher oil price over the coming period is also still a very live factor to be considered.
And yet, Cumesh, I mean, we have seen some progress domestically for South Africa. So what does that mean for the progress we've seen from the GNU trying to at least bring down some of the issues of the past decade? What's your expectation? Will it be dictated by what we are seeing in the U.S. and elsewhere?
I think, Jennifer, the GNU has probably been one of the most positive developments we've seen from an SA perspective for a significant period of time. There's an opportunity for South Africa to focus on a higher GDP growth print. And I think, our own house view at the moment would be that for 2025, we're looking at a print of about 1.7%. Just moving that from 1.7 to 2.5% adds approximately a million new formal sector jobs. Those are the sorts of things that drive growth, drive the economy forward, and I think create an overall upliftment. There's generally, the GNU has been very well received by the markets, and as much as we're seeing some sort of asset price volatility right now, we saw asset prices rise on the back of that announcement. So I think the GNU has been good. What's very key for the South African economy is that we continue with the level of structural reforms. The fact that we've had a significant period of no load shedding has been a massive boost both for confidence, for productivity, and for the economy as a whole. The focus, I think, is shifting from not just generation, but how do you build grid capacity to sustain ongoing generation, and the importance of public-private partnerships in that space is critical. The other aspect from a structural reform perspective, Jennifer, is really around roads, transport, rail, ports. And that's going to be a significant need, where I think the opportunity for government to embrace support from civil society and business, again, is going to be critical, because that will help us create a far more solid foundation for GDP growth going forward.
Well, and Cumesh, I mean, part of that is unlocking more foreign direct investment. I know you recently said that South Africa being the G20, holding the G20 presidency, could potentially open the door to that. You compared it to the 2010 World Cup. Why? Why do you think that is? And do you actually see FDI channeling back into the country?
I think it's a moment for South Africa to take a centre stage positioning by hosting the presidency of the G20, and through that you'll be able to leverage the platform, I think, to showcase the best of what South Africa has to offer to the rest of the G20 members. And I think that opportunity and embracing it would be, because what runs alongside the formal meetings of the G20 through the various finance ministries, central banks, as well as presidential delegations, is the B20. And as important for the G20 is the B20, and the work that the various global corporates will do and international businesses will do to understand South Africa. So working parallel to that, there's a lot of optionality for us to show and showcase what South Africa has to offer, the industries, the opportunities for some of these public-private partnerships we're talking about around rail and ports activity. I think we need to have a very structured agenda and to embrace the G20 as a growth opportunity for the economy.
We'll see what happens when South Africa takes over December 1st. We have to leave it there, though. Cumesh Moodliar, Investec South Africa CEO. Great to speak with you again, Cumesh, there in Cape Town for us. And sticking with South Africa's central bank has lowered borrowing costs for a second successive meeting and said its modeling shows further cuts are in the offing, but the outlook remains highly uncertain. Policymakers cut the benchmark interest rate by 25 basis points to 7.75%. Data this week showed South Africa's annual inflation cooling more than expected. And for more stories from the continent, be sure to subscribe to the Next Africa newsletter on the terminal and on our website. And of course, our podcast available on Apple, Spotify, and wherever you usually get your podcasts. Jumana?
Nice one. Thanks, Jen. Well, delegates at the COP29 summit in Azerbaijan are still working to resolve deep differences over how to scale up international climate finance after an initial proposal sparked widespread anger. For the details, let's bring in Bloomberg's Siobhan Wagner, who's covering the events in Baku. Siobhan, it feels as though it's been a bit of a tortuous couple of days in terms of trying to come to an agreement on these climate financing targets. We were talking about the trillions of dollars that had been bandied about even before the COP summit began. How likely is it really that we're going to get a number that satisfies all stakeholders?
Well, the number is one thing, and we did get a draft deal yesterday, and it had on there a space for an X trillion figure. But what I think people really are going to be looking for is what form this money takes. Is it how much is actually going to come from country coffers, and how much of it is going to come from the private sector, which, rich nations who are on the hook to kind of deliver on this finance deal have already been telegraphing for weeks that much of the money that is going to be promised is going to have to come from the private sector, and that's going to most likely be in the form of loans. And for developing countries... Sorry.
I was just going to say, perhaps you have something else to add on climate financing, but another point of contention was with regards to the language around fossil fuels. And this was one of the signature achievements of COP28. Back in Dubai, there was language around the phasing out of fossil fuels with a few caveats. But this time around, there are some delegations who are just not happy to even talk about it.
Yeah, and so Saudi Arabia came out yesterday very clear that they didn't want this fossil fuel language in any kind of part of this sort of deal text. But this has been a bit of a line in the sand because the EU and the US are really keen to get that language back into somewhere into the pages of this deal text. That phrase you mentioned, the transitioning away from fossil fuels, which was agreed in Dubai last year. You had the EU climate chief yesterday saying that a lot of people are trying to pretend like last year's COP never happened, but they see it as really crucial because agreeing on that language means that we're all on the same page, that this money that's going to be agreed upon here will be going to fight this overall goal of keeping warming to this kind of stretch target of 1.5 degrees Celsius that was agreed in Paris.
Yeah, and then of course next year is going to be a big year because there's a deadline for countries to update their NDCs. So all that's going to happen in Brazil in 2025. Bloomberg's Siobhan Wagner and Baku, thank you so much for the update. And on a programming note, join the top conversations on the energy transition at Bloomberg's BNEF Summit, where energy, finance, and technology converge. So scan the QR code now for more details and how to sign up. It kicks off in Shanghai on December the 3rd. And coming up, Kenya scraps 2 deals with Adani Group worth some $2.6 billion in the wake of corruption allegations. We'll bring you the story next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. To Kenya now, where Kenya has canceled 2 deals with Adani Group worth some $2.6 billion over alleged corruption. The move comes just hours after the company's billionaire founder was charged by the U.S. in a separate bribery scheme. Let's bring in Bloomberg's Ndiro Oganga, who has more for us. So, Ndiro, these are some pretty big deals. They've caused a lot of attention in the country over the past few months. What do their cancellations then mean for Kenya?
Jen, this means that the government will have to find alternative ways to fund these projects. They can go for competitive bidding, or they can choose to fund it themselves. Earlier on, we had heard from the former Prime Cabinet Secretary, Musalia Mudavadi, saying the diaspora bond could be a viable tool in helping to finance these key infrastructure projects in the country. And, you know, this cancellation comes as a huge relief to many Kenyans because they had expressed hesitation over this deal. Adani was done through a privately initiated bid. It cleared very quickly, raising questions over due diligence. In retrospect, what the government should have done is float this tender, 6 submissions, and then settle for the best proposal. But in contrast, what they did was they rushed this Adani deal. It was marred with a lot of opacity. Nobody knew the nature of the negotiations and neither the value for money that it offered Kenyans. And this cuts across both their deals. When you look at the airport deal where they were supposed to build, operate, and manage the airport for a period of 30 years at a cost of $1.85 billion, building a second runway and also a new passenger terminal. There was a petition that was filed in court, and it was stating that this project is unaffordable, it threatens the jobs of locals, and also it exposes Kenyans to great fiscal risk. Their energy project was also halted by the court on similar grounds. So this is a big blow to the government.
Yeah, and Ndiro, the president saying, of the many difficult assignments I've undertaken, this fight against corruption is one I now take with resolve going forward. Does this U-turn, though, score him any political points with the electorate, considering what you just said?
That's a really interesting question, Jen. Kenya is a tough crowd, and the government has not been doing much to help itself. Prior to this announcement, we had the Minister of Energy appearing before legislators and defending this project, speaking about how great it was. And he said, quote, there has been no corruption or bribery as far as PIP with Adani is concerned. And he said that the U.S. indictment has no impact on the Kenyan project. It could move forward. A couple of hours later, his boss, the president, comes forward and then cancels these projects altogether. And this is what happens every time with this government. When a policy is unpopular, they try to defend it before they receive their ground. President William Ruto himself was defending the Adani deal, saying the country is in need of public-private partnership and there's no more headroom for borrowing. And it's important to know that this government, when they came into power, they were quite popular. Their bottoms-up economic policy was quite popular across the country. And now they're struggling to even push any policy ahead. All the deals that they're brokering are meeting great hesitation. So the only standing ovation he got was from Parliament. The greatest sentiment across the country is, we told you so.
No one better to get insights and reporting from than you. Bloomberg's Ndiro Oganga in Kigali for us. Ndiro, thanks so much as always. Jumana?
Now for a look at some of the other stories we're following. In Senegal, President Bassirou Diomaye Faye has won an overwhelming majority in parliamentary elections. The results paved the way for the new leader to deliver on a reform agenda targeted at stabilizing the state's finances and creating jobs and other economic opportunities. The preliminary tally gives Faye a supermajority, conferring him the ability to amend the constitution. And official figures suggest almost 2 out of 3 Nigerian households are going hungry, with families skipping meals as they cannot afford enough food. The National Bureau of Statistics says hunger rates almost doubled from 37% in 2019. Food price inflation peaked at a near 30-year high of 41% in June, with a fifth of households relying on help from friends or relatives. And coming up, Swedish battery maker Northvolt files for bankruptcy and a blow to Europe's EV ambitions. We'll have the details next. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Well, Swedish battery maker Northvolt is filing for bankruptcy protection in the U.S. after a bid to secure rescue funding fell short. For more, let's go to Bloomberg's Tom McKenzie in London. Tom, was this a surprise for Northvolt?
Not a major surprise, given what's unfolded in the recent weeks and months. And just to take a step back for viewers, the importance of Northvolt and what it tells us about Europe's ability or lack of ability to build deep tech and supply chains in Europe. So Northvolt was the European bet, one of the key bets on building out a supply chain around electric vehicle batteries for their own car manufacturers here in Europe, largely with factories in Sweden, but also in Poland. They also have a footprint in the US as well, and looking to build out factories in Germany as well as Canada, though, of course, those plans are now being questioned. This was a major bet then by Europe, backed, by the way, by the likes of VW, by the likes of Volvo, Goldman Sachs and the European Investment Bank. They raised about $10 billion. They've had major problems, though, in terms of the quality of the product and in terms of meeting timeframes. They've had a number of contracts pulled, including by some of their investors, like BMW, earlier this year. They've been most recently on this focus to try and raise $300 million, basically a bailout fund to secure financing for this business, to give them a lifeline. Basically, they failed to do that. So now they've filed for Chapter 11. They have about $30 million in terms of cash on the balance sheet that they can use to pay wages and keep operations going, at least in the short term. But they have a debt pile of close to $6 billion.
Wow. So this, in some ways, could be construed as an idiosyncratic story specific to Northvolt, but also speaks to some of the malaise in the sector as well. They are battery makers for electric vehicles. We talk about some of the headwinds facing that industry. To what extent were they caught in the eye of the storm?
Yeah, that's a really good question, and it points and hits some of those key notes that they've focused on. So, to some extent, this was bad timing for Northvolt. They had their own management issues, absolutely. So they were missing in terms of quality and in terms of actually producing at volume. And we know that really frustrated their customers to the point where BMW pulled that $2 billion contract earlier this year. But as you rightly say, the timing really unfortunate as well for Northvolt, as they came out with volumes starting to produce just at that time when the EV market more broadly was slowing down. And then you had price cuts, they said, from some of their key Asian competitors, CATL over in China and LG, the battery maker over in South Korea as well, that also really challenged this business. They are now apparently looking for a strategic long-term partner, so that's the potential next news line that we're going to be watching for in the days and weeks ahead. I spoke to one investor a couple of weeks ago, not an investor in Northvolt, but an investor in deep tech, and he said it was always incredibly ambitious, if not foolhardy, to try and go up against the likes of LG and CATL.
Well, there you go. They ate a bit of humble pie. Bloomberg's Tom McKenzie in London with the story on Northvolt. Thank you. Well, quick look at equity futures. Before we hand you over to Tom's show, the only bit of green is European stocks futures up 0.1%. The rest of these markets all leaning towards the red. That is it for our show for the week. Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Stay with us for Daybreak Europe.